Hello, Sense of Things. It's Jeff and Ron once again, and we are here for another episode of your favorite internet finance slash fun show. So today, Ron's got some stuff for us. He's got a few fun financial facts for us, and he's going to go into a little bit more of some market data that he's been doing some research on. So I will leave it at that and surprise you as we come out. So hang in there. We'll be right back in a second. Hey, everybody. Welcome back to the Sense of Things. And I have Ron here with me. Ron, how you doing, brother?
Good morning. Sorry, I hit share too quickly there. My boo. It must have been heat sensitivity.
It was heat sensitivity. It was the
either that or it's the end of the day jitters.
That's it. We usually start off earlier than we did today. Interesting for us. It's a little bit later in the day, and we're both babbling a little bit. So what do we have, man? You got some fun facts for us.
It's always some fun things. Visualcapitalist.com has always got some great stuff, both domestically, globally. They have some pop culture stuff, but a lot of it surrounds business, economic, a lot of money-oriented stuff, hence Visual Capitalist. I thought this was interesting. America's favorite car brands broken down by kind of generation. Boomer, you and I, Gen X, Millennial, and Gen Z. And I thought this was just interesting. I had a Honda when I was younger. I had an Acura when I was younger. I never had a Chevy or a Ford. But I thought it was interesting that Honda is now the number one ownership rate for Gen Z.
Huh. That's interesting. It's interesting. It surprises me with the millennials that Chevy is so high. Chevy and Ford are so high for them. I would have expected them to be driving the rice burners.
You got a Mustang, so you got a Ford.
Oh, I do not anymore. I've got a Camaro.
Oh, excuse me.
But
the
yeah,
Chevy,
we're a 3-brand house. So we've got a Dodge, we've got a Dodge Challenger, I've got a Ford F-150 and a Camaro.
Gotcha.
In fact,
so little fun little work in there.
I have never ever in my life owned anything but the big three.
Understood. Okay.
Yeah. Grandpa was a GM guy for 40 years, so I am a big believer in American made, although Toyota trucks are made like right south of us. So I'd call them American made all day long.
I know. Even though the profits are going back to Japan.
I know, but they're Texas made, so they're much better than the ones coming from Japan.
So I am not a beer guy. I'm a vodka tequila guy, and I'm a vodka tequila snob. I don't buy any vodka tequila that is owned or endorsed by a celebrity. They're rich enough. Okay. I want the good stuff, and I'm not paying them. I'm not a beer guy. I don't mind a cold beer. I'm not an IPA guy. But I got to tell you, China is the number one consumer.
That's surprising. Yeah.
Beer?
Yeah.
I saw this. I had to bring it up because Texas is a big beer state. I know tequila too. I don't know if you're a beer guy or not. I can't remember, but this really shocked me.
Yeah, really not. I'm more of a wine.
I thought Germany would be bigger.
Yeah, you'd think. Yeah. China is just a way bigger country too, but yeah, that's really surprising.
They drink tea.
Yeah. Well, apparently,
look, and also Germany too. They like their beer warm, which I could never do that.
It's cellar cold, so it's not really cold, but it's not really warm. The British are like they could just set it out on the counter for hours and be happy. And
I hear you. So that's beer. And the last one, I thought this was pretty good. So this is the purchasing power of $100 in every state. And I thought it was interesting because my state now, Arizona, is par.
Right on the money.
So you get $100 worth of $100. But if you go to California, you go to New York, you're not getting your money's worth. And I thought was interesting was Washington State.
Yeah.
You only get 90 cents of a dollar in Washington. I thought that was interesting.
Well, your home state of Pennsylvania too.
It is an expensive state.
Yeah. Your home state of Pennsylvania too, 104. higher than us in Texas.
Right. Yeah, you're getting bang for the buck. And even in Texas, you're getting a little bang for the buck. But look at the flyover states. You're getting big bang for the buck in the Dakotas and in Kentucky and Oklahoma and Montana. You're getting big bang for your buck up there.
No, because there's nothing else to do. That's why.
Not nice.
It's just
all right. We always talk about, like, in 2023, the top 10 stocks in the S&P made up 70% of the move. And if you just looked at the equal weighted 500, the market was only up 3 to 5%, plus or minus, right?
Yep.
So looking at the weightings, and these are fairly recent weightings, you could see how much some of this has changed. But even look at those top 5.
Yep.
At the end of the day, you're still looking at almost 25% of 500 stocks is the top 5 stocks. It's still too much. It's still too much. And I find this to be interesting because in the last 2 months, we've had a little bit of a rejigger here as far as the weightings because of the pullback. The S&P 500 has a very interesting double top formation. So with the September swoon and possibly October, I think these numbers will be weighted a little bit differently. I don't know how often you look at this.
I honestly, I don't. You usually bring it up, and I finally take a chance or take a look at it. We use a technical approach to virtually everything we do. It's funny, we've held Nvidia for pretty close to it's very rare for us to hold more than a month on any one individual stock. And we had held Nvidia for almost 7-8 months. And the model actually dumped it out at the beginning of this month, which it's actually kind of worked timing. Good. Yeah.
You had a nice return after the August 5th swoon. And my last slide is the change in the EPS and earnings. And as we know, at the end of the day, the mother's milk of the market for fundamentals is earnings, EPS.
Yep.
And I thought this was interesting. If you're comparing the two as far as Q3 versus current year 2025, at the difference between where money has shifted in the last year from information technology all the way down to energy. And I don't know if you've been following oil, because I never read this part of my mantra, my investment mantra. We never recommend oil to clients, anything that's oil related. Chevron, Exxon, all that good stuff. We don't recommend any of that because it's too pegged to oil. Oil is like sitting in the 60s now. What happened to the shortage in Europe the last couple of winters? I didn't hear that we were producing any more oil, and I heard OPEC wanted to cut oil. So why is the price going down? Look, I always said oil is one of the most manipulated markets in the world. It should be interesting to find out when this whole thing shakes out why. But if you just take a look at some of the other things here, money's been constantly coming out of industrials. Real estate has fluctuated a little bit, but the energy thing is a little bit disturbing because typically energy prices go down when economies are slowing down.
Like I said, there's all these little tiny things that what aren't necessarily things that you typically would relate together. But yeah, I totally agree with you. And I didn't realize the amount of it because once again, we don't really use energy stocks at all in any of our portfolios. So I don't really follow it or really care, quite frankly, besides when I stop and fill my truck up or something. But
and the most boring sector for decades, over decades, has been utilities. And it's basically been one of the hottest sectors in the last year. And people are attributing that to all the AI in the data centers.
Yeah. And the interesting one that I hadn't been watching and it snuck up on me was real estate. Real estate took off. And it was like July through August. I just happened to, we had I think one of our podcasts, and I just happened, you had brought up like a chart similar like this. And I was like, I wonder how real estate's doing with the potential of interest rates going down. And it was up like 16% in July.
Right.
The real estate index, which is just insane, that much movement. But it does typically do better when rates go down. But I don't know what's going on because everything I hear in the corporate real estate side is not real good. Now, like you said, with data centers and things like that, there's just tons of money flying around there.
Not only that, but mortgage rates have come down, and they'll come down more in the next year as as the Fed rate goes down. But in the end, really, what it comes down to is, I guess the ones that are doing really really well are the new home builders, which
Yeah.
those are the luxury homes or whatever you want to call it. People that have the money, they may not be financing.
Yeah, that's true. Yeah, or their builder financing. I think that's been the big thing when I talk to a lot of my
Right.
friends in the real estate business. The builders have been able to do extremely well because, all right, we'll come down on the interest rate, but you're going to pay a little bit more for the price of the house, so they can jigger it around. It's like going and buying a car and financing it. What do you want to actually pay per month? Okay, I want to know what I'm paying for the car. I don't care what the monthly payment is. I want to know what I'm paying for the car.
It's like a self-insurance. So
Yeah.
they've got to do that if they want the business, which is totally understandable. But
Yeah.
It's interesting. So I want to go back to something real quick and we can wrap up with this.
Yeah.
In my presentations to prospective clients, they want to talk about a lot of different things, like I'm sure they do with you. And I tell them there are 3 things we do not recommend, we don't get involved in, and we don't invest in. I'll bring it up since we don't. One of them is energy.
Yeah.
And I'm not saying you can't make money in gas related or natural gas related companies. It's just that the oil market is and natural gas market are some of the most manipulated markets that at the end of the day, doesn't matter how solid the company is.
Yeah.
If they're not making their revenue they're not making their margins on oil, they're not going to do it. So energy is one of them. The other 2 very quickly, and I want to know about you. We don't get involved in anything crypto related.
Nope.
And anything precious metal, gold, silver, platinum. We don't do any because can you tell me how much gold, silver, and oil is in the ground? And can you tell me how much has been drilled and mined?
No.
So I don't get involved in any of those things that I can't understand. And I don't want to hear about supply and demand, but it's about fundamentals. And when it comes to crypto, gold, silver, and oil, it's not fundamentals. It's something else.
It's not. Yeah. The only thing we do in the gold space is I run an an option income strategy utilizing the GLD. That's the only thing I really do with gold because the price of it has not really done much. It's been better over the last, I would say, 20 years than it had been prior to that. I did see a statistic once that from like 1920 up until I want to say it was like 1980 or 1995, the price of gold had not gone up faster than a man's suit during that time period. It has gone up more over the last, let's say, 20 years because we've had a lot of weird volatility and recessions and things like that. I don't like investing in anything where I can't really get any kind of a dividend from it or some kind of income. And like I said, we do that one income strategy that might be 5 to 7% of a client's portfolio. It generates a nice little chunk of change, but it could change. But we do it on a weekly basis, so it's easier to manage the risk. But yeah, pure gold. I have one client that has some gold in his portfolio just because he wanted it and he told me what he wanted. So other than that,
gold's going to go up next year.
Yeah.
Based on what?
Yeah.
Oil's going to go up. The demand's going to be there. Europe's going to be in a shortage. That was 2 winters ago. Didn't happen.
No. Yeah. I don't get it. I honestly don't get it. Like I said, any kind of commodity. Yeah. Any kind of commodity, I just am not a fan of in most cases. Cool. Good stuff, man. Folks, we do these shows for you. So if you are interested in more of this, if you're interested in us talking about some of these strategies we talk about, let us know. Put it in the comments. Make sure you subscribe to the channel, and we will see you guys back here the very next time.